Welcome to Caching Waves. This is an Eliott Wave update for Stellar. I wanted to do a quick update on this one because I am in it, the trade setup, and I've leveraged up. So I just want to talk about how I got into that and how I'm managing it going forward. But if you're new to this chart, we have proposed, I think earlier in the week, this is a multi-year triangle, and we're expecting explosion to the upside, two all-time highs here. Okay, so this is the proposed wave count. It's very nice. It was a very close stop, so I was comfortable getting into this trade. The original trade setup was, where's my trade setup? There it is. It was down in this area. I'll show you my average price too after, but something like this all the way to all-time highs. So targets unknown at the moment. Obviously it's above this B wave, but I will be mapping that out as the patterns fill out, our 5-wave impulses. So got in right in that zone, so a really tight stop. It's looking good at the moment. But I also just want to say that our alternative is this is an impulse, although I give it, it's pretty ugly. And right now I just have an A wave. So if this doesn't work out, the direction is still the same in my current point of view. We expect an ABC to the upside, in which case we might get a lower correction, or this turns into a more complex structure, WXY. We move to the upside, make some sort of sideways flat, but still the direction's the same, so I'm pretty comfortable in this trade. Okay, so we'll go back to the triangle, go down to the smaller time frames, and I'll show you where I'm at now. So my original trade setup was down in this area, stop at this low. And today I was leveraged up. So I'm going to show you the impulse I'm tracking. The pitchfork isn't amazing right now, but I'm just going to leave it on. But sometimes that happens, right, on when we start trending from the lows, we get some ugly patterns. If you're wondering what those can look like, check out my H-bar video about spotting bottoms earlier in the week. We had 3 different bottoming patterns we went over from previous starts of cycles, and all 3 were different. So this was obviously a bit concerning. This sell-off ended up being a WXY, even though it looks very sharp. It's just 2 ABCs back to back, but it does look like an impulse. This is why I go with invalidation rather than, putting my point of view, saying it can only be this. The market can be anything, right? As long as it's valid. So yeah, original setup was something like this. I'm on a different exchange for the pricing, so something like this. I'll move this over. I'm not sure my original average price on the entry because I've leveraged up, so my average price has changed. Okay, so we got what was proposed a 1-2, but it also looked like a correction, right? Could also be a WXY to the upside, but we knew we were looking for a bottom in this area. Triangle was invalidated very close. That's why I decided to take the trade. This could have been a impulse to the downside, but also look corrective. So this is where you're constantly second guessing yourself. That's why I said I'm not leveraging up until a certain thing happens. And what that was the break of the B zone. So I'll show you in a moment. Sorry, I'm getting all over the place here. I'll show you what I'm tracking. Got this as a diagonal 1-2. I've mentioned this in many videos. So this is the pull from wave 1 off wave 2. So we usually look between the 618 and the 1-to-1. Or sorry, the 618 and 382 extension of that for our second 1-2, which you can see hit perfectly at the 618. And we're targeting the 1.618 is our standard target there in blue for our third wave in blue. That's at 10 cents, 0.65. Looks like we're going to get higher though based on this wave currently panning out. So I then took our extension of our second 1-2, very short retracement. You can see we have 3 waves right now, and our third of the third in green. So looking for a sideways consolidation and a move up to the 1.618 or the 1.786 in green, which is 10.63 and 10.84. But you can see that's only our third of the third, our third wave in green. So it looks like in blue we're actually going to surpass the targets, the 1.618. So it looks like we might get a little bit of an extended third, which is always good. Looking for our fourth wave after, fifth wave. All right, we'll see if this channeling technique works on this impulse. My guess is it probably won't. That's original pitchfork. We're obviously under it. Modified, still not working, but all modified is a channel. If you take the beginning of wave 1 off wave 2, extend it off wave 1, it's just a channel. And usually we would look for our fourth wave to hit off the top side of the channel. So we'll see if that works out. Expecting a sideways consolidation if we get this 5-wave move up, because this was so sharp, right? We're going with our guidelines of alternation here. So we'd expect a flat pattern triangle, maybe running flat, but because this is sharp, we're looking for something sideways, which will get us more confident on this setup. So I'll show you how I leveraged up. So I took our wave 2, and at the time I was looking at it as a potential B wave, which is, if this was a 3-wave, remember our B and X zone is right here between 935 and 952, where we could have made this running flat, right? That was open in this zone this morning. But in validation of that is the 1.618 extension at 979. So at 998, like one tick above the 1.618 of this extension here, the wave 2, that's where I leveraged up. So my original entry was somewhere around here. I leveraged up over here. My average price is somewhere around here, which is actually a break-even trade now if I get stopped out. So I was able to double my position size, and now my stop is at the 618 of this potential third wave on the micro right now, just the third wave in green. Just the third wave in green here, this one. So I'm at like 954. Well, my exchange, it might be a couple cents different, but not a couple cents, but a couple hundredths of a cent difference. But my stop is right there right now, because if this is a third wave, we can't come back, we can't overlap wave 1, and it would get pretty sketchy coming down to this area, right? And if that did collapse, I would have to relabel this like a WXY, as like an A wave complex correction. Get another move to the downside, that's most likely like our B wave, and then we get another zigzag here to complete, right? And then we'd collapse, break this level. So that's why we use those invalidations. So I'm using guidelines on this one, the 618, that the fourth wave shouldn't drop below that. So obviously my stop now is pretty much at my or slightly in the profit on my 2 entries. So that's what I did. And now what I will do is I'm not going to, so I'm using these stops right now, just to be clear, not to take profit on them, but to give me the most profit if this turns against me on this count. So this is what I tend to do just so I can keep that large position size in the future. Because if I take profit up here around the 5th wave, it's very difficult to get the amount of position size I got down here in the lower priced areas for the next wave up. Like if this is a 1-2, right? Because I only risk 1% per trade. So the amount I got here might be half as much over here on the wave 2 if I take profit at the wave 5 and rebuy. It's just the way it is. So what I'll do is I'll track this. We'll probably get divergence on the 1 hour for this 5-wave move in blue. So we've got our peak on our third. We're getting our volume just like we should. And on the 1 hour, we'll be looking for divergence between that third and the fifth, higher highs, lower lows on the RSI. But on the 15-minute chart, we should get divergence as long as we get an impulse. Diagonal will be obvious, but if we get a impulse in our 5th wave, that will be on the 15-minute for the 5th wave. So it'll be like 1, 2, 3, 4, 5, like that between this 3rd and 5th of the 5th. So 15-minute RSI for each one of these smaller waves in blue, 1 hour for the larger wave. Okay, that's how you use RSI properly, at least with Elliott Wave. Every other signal you see is just mixed. It's just like, oh, we're oversold. Oh, we're overbought. We're oversold. We're overbought. It's useless unless the trend's turning, right? Gives you indication the trend is turning. Okay, so what I'm going to do to keep my position size in here. What I'm going to do is once I see these 5 waves in the 5th, remember we could get an extension here and we just keep going. I understand that. But what I will do is literally just hedge. I will short the exact same position size the other way until I get like an ABC, and then when I get my ABC correction, I can close that short hedge. And then I have the same amount of position size, and when I hedge from up in this area, I actually locked up the profit from this entire move, right? I'm neutral in this whole area, and I'm able to keep my entire position size I was able to build to the upside. And yes, I pay a little bit of fees, but it's well worth it to me. I've missed out on a lot of money in the past by taking profit too early and then getting a smaller position size, and you kick yourself saying, why didn't I just leave it, right? But that's the best I've come up with, is just a hedge when I get a completed 5 waves, and then lock up that profit, and this whole zone's neutral. And I can just let the wave fill out and not get shaken out. Nothing like that. I can just let the waves, expose themselves to me to what they're most likely. So I do have the stop here right now. That's if this ends up being a complex correction and we just collapse. But once we get these, I'll be playing the stops all the way up. Once we get this 3rd wave complete, I'll take the entire move of the 3rd wave and adjust the stop there again, right? So it's each wave that completes, I'm adjusting the stop. And once we get this to this 5th wave high, my stop will probably come off completely, and I'll just hedge. So I won't have a stop in place while this plays out, but I will be neutral and technically taking profit there by hedging the entire amount the other way. Okay, if you have any questions about that, let me know. But a big thing to note is it's one thing to be able to analyze a chart. It's another thing to be able to manage a trade and be good at it. They're completely different beasts. Completely different things you need to learn about taking the best, how to manage every situation properly. I'm not perfect at it, but I strive to be as good as I can at it. But there's a lot to it. It's a lot of mental games, First you might say, oh, I should take my profit here at this 3rd wave, and then you don't, or whatever, and then it comes against you, and then you beat yourself up. I knew I should have taken it there. Or you decide to take it there, and then we get an extended 5th, and then you say, why did I take it there? It's a no-win battle with yourself, right? If you second guess everything you do. So I would suggest just looking, if you want to get better at it, look at previous impulses in history and be honest with yourself and say, how would I have played this? And then knowing what it was, say, how would I have played this if I could have assumed this was coming, you know, things like that. But anyways, that's it for this one. XLM looks good. Hopefully we get this, and I will be, again, taking my stop off if we get this 5 waves and hedging short to keep my position size. All right, guys, that's it for XLM. Thanks for watching. I'll see you on the next one.